Absorption versus direct costing, also known as variable costing. Actually, I call it variable costing more than direct. But those two are used interchangeably. Absorption costing is sometimes called full costing, F-U-L-L, full costing. But typically it's called absorption costing. So these are two good definitions you need to know. They'll hit you with problems using these two simple definitions. These problems can be quite easy once you know how to handle them. So absorption costing is our GAAP method of recognizing cost. Under absorption costing, if we're in a manufacturing plant, the cost of the goods that we manufacture are those three things we just talked about: direct material, direct labor, and every bit of overhead, all capitalized, which means all recorded as inventory, as an asset until we sell it. So the only difference then in variable costing, which is not GAAP, variable costing is something we might find useful internally. But variable costing is also direct material, also direct labor, but just variable overhead, no fixed overhead. That's the only difference. Variable costing takes fixed overhead and treats it as a period cost. Just expenses it then and there. Doesn't attach to the product, doesn't go to inventory. It goes straight to the income statement as a period expense. Only difference is those two, or in those two, is fixed overhead. Everything else is the same. So what the CPA exam and the CMA exam likes to do to you is they like to ask you a question. They'll give you all the information, and they like to ask you a question which will produce a higher or lower net income, variable or absorption costing, and by how much. That's their favorite question on this. That's a lot more often the question than what is net income if they use variable costing. They don't ask that as often. They could, but they don't usually. They usually say, here's a circumstance which produces the higher net income and by how much. So there's a really, thing you need to know first, just these simple definitions. Then what you need to know is how to handle these problems. And once you know how to handle these problems, it's really easy. So here's the deal. The first thing you need to make sure you know, commit this to memory, if production during a period is greater than the sales, absorption net income will be higher. We'll kind of illustrate that in a minute. Or now, but we'll illustrate it as we do numbers too. So think about that. You're in a period, you produce more than you sell. That means some of your goods are going into inventory, right? Well, under absorption costing, fixed overhead is being inventory for those units. Under variable costing, all of that fixed overhead goes to the income statement. So bigger expense under variable costing. Less expense under absorption costing because we're inventorying some of that fixed overhead. So if you produce more than you sell and stuff goes into inventory after that happens, absorption net income is higher. So just remember that. Production greater than sales, absorption net income is higher. So just kind of say that to yourself over and over, and also realize the opposite is true. Just don't crowd your mind, memorize a bunch of stuff, but do say that over and over. Production greater than sales, absorption income is higher. But if production is less than sales, absorption income is higher. Can I just say absorption is higher? They have variable income is higher. So if during a period you sell more than you produce, which means you're pulling from some of your beginning inventory, right? Well, under variable net income, all you're expensing is the fixed overhead of the period. Absorption, you're expensing, yeah, again, all the fixed overhead of the period, but then you're pulling from inventory from previous period, and that little bit of fixed overhead that was inventory then is also being expensed. So you're expensing more fixed overhead under this circumstance. So that's the deal. So definitely take note of the two definitions. Remember, the only difference is fixed overhead. Take note of production is greater than sales, absorption income is higher. You know that. You also know the opposite is true, so you don't have to state the second half of that over and over. All right. So once you know that, these problems get pretty easy. So check out an example problem I stuck on here. Oh, by the way, selling and administrative costs, those are always period expenses no matter what the method is, just in case you need to be reminded of that. All right, check this out. This example. Fleet Incorporated manufactures 700 units of product A during the year. Product A's variable and fixed costs were $6 and $2 respectively. The inventory of product A on December 31st consisted of 100 units. There was no inventory on January 1st because it was a brand new product they started selling. What's the change in the dollar amount of income if variable cost was used instead of absorption? All right, so they've given us this information. All we have to do is apply a little bit of knowledge. First of all, production was 700 units. And they don't tell us exactly straight out how many units they sold. They did tell us that we got 100 units left over in inventory. So think for a second. Sales then were all but those 100. Makes sense, right? Otherwise, how do you still have 100 units left over? So we know we produced more than we sold. We know absorption income is going to be higher because that's just what we know. We already memorized that. Okay. Now we just have to figure out by how much. So this is really easy. We know the only difference in the two methods is fixed overhead. Under one method, we're expensing all of it. The other method, we're inventorying for those 100 units, right? So they're telling us that fixed manufacturing cost per unit, $2, right? So 700 units produced minus 600 units sold. $100 difference times $2 fixed overhead per unit. That's where the only difference comes in. So it's a $200 difference. Between absorption and variable. So now we've got our answer, right? It'll be a $200, and you have to see how the question was phrased to answer whether it was a decrease or an increase. So it says, if variable costing was used, what would have happened? So absorption income is higher. Variable income would have been lower, right? It would have been a $200 decrease. You can approach every one of these absorption and variable costing problems the same. See how many units were produced and how many were sold. That'll let you know which version is going to be higher, absorption or variable. See the difference in what was produced and sold. Multiply that by fixed overhead, that's the amount of the difference every time. Here's another. Company produced 275,000 units and sold 250. Production greater than sales. Absorption is higher. $275,000 produced. 250,000 sold. That's a 25,000 unit amount. All we have to do is multiply that by the fixed overhead per unit and we're done. So now we got to figure out fixed overhead per unit. So these are our variable costs. We don't care about any of that. Here's our fixed overhead, 2.2 million. So we got to figure that out per unit. 2.2 million. Fixed overhead. And we'll divide that by, what do y'all think? Units produced or units sold? May seem obvious as we're saying it, but you get on the test and you're going to have that question. You're like, oh man, what am I multiplying by to figure out the unit cost of overhead? Well, you incur overhead as you produce, right? So we're going to divide that by the 275,000 units we produced. Overhead is not a selling expense, it's a manufacturing expense. $6.2 million. $8 fixed overhead per unit. All right, so now that we've done that, stick it up here. That's the only difference in the two methods, right? So 25,000 times 8 is $200,000. So the question is, the difference between income calculated on absorption versus variable is that absorption costing income is $200,000 higher. $200,000, I'm saying greater. So there you go. So kind of every time you can do that. So good things to know. Any questions on it? I think they actually have some questions we can do too. Got for us. There are 5 of them. I don't know if we necessarily need to do all 5 of them. We've already done 2 good examples here. Let's glance and see what we want to look at here. Any of these is fine to look at, and if anybody wants to stop me and say, hey, let's look at one of these in particular, we can. But we don't have time to do everything. Here's number 4 is another one similar to what we just kind of did. It'll take 2 seconds. Worded slightly different. So let's glance at it. At the end of their first year of operations, 1,000 units of inventory remained on hand. Well, that tips us off that what? Production was greater than sales, right? If they have inventory on hand after that first year, that's what would cause that to happen. Variable and fixed manufacturing costs per unit were 90 and 20. So 20 is our number, right? If it was absorption rather than direct, what would happen? They already tell us higher, so we don't have to even answer that part. How much? Well, it'd be 1,000 units times the $20 fixed overhead per unit. So $20,000, right? So more of the same. I think 5 is worded a little differently. It makes us back into what we've kind of been doing at the beginning. So they've got a company that does variable and absorption income statements. Overhead applied in year 2 was the same as in year 1. The year 2 variable costing statement reported a profit, whereas year 2 absorption reported a loss. That's another way of saying one is greater than the other, right? So it says year 2 variable costing is greater than absorption costing. So variable income is greater. So that tips us off. They were backing into what we usually begin with in the other, but that tips us off that production is less than sales, right? I think that just gives us the answer, doesn't it? The difference in reported income could be explained by the units produced in year 2 being less than sales. So I like that one. We can look at any of these, but I think we can move on unless somebody specifically wants to look at any of them. Got a lot to cover. Okay. All right. So I think that covers the ground on that stuff. Job costing. It's a big topic. Remember, we're kind of scratching the surface a bit in the BEC section of the exam. Mile wide, inch deep. We can't go into just super deep details on all this stuff, and they don't expect us to. So job costing. Job costing is easy, really. This is cost accounting, so we're trying to figure out how much something costs. Job costing is good for costing something that is kind of unique in nature. You're not mass producing a bunch of stuff. You are producing, building a house, custom order something, doing somebody's tax return, doing a printing job. I think our book says large and expensive stuff, but it's not necessarily used for large and expensive things. It's just unique things. You might be printing out 100 invitations to something. That would be a job. It's not mass produced. That would require our other type of costing, which is process costing. So what you need to know about job costing is kind of what we've already said a few times tonight. The job will be direct materials plus direct labor plus overhead. Overhead applied, that is. That's the cost of the job. So that's job costing in a nutshell right there. Or really, that is job costing. We're looking for those 3 things. 2 of those things are really easy in the book and on paper. In real life, maybe not. We don't have to worry about real life right now. We're taking tests on paper. Direct materials, they'll give it to you. They'll say, hey, here's how much materials was on the job. Here's how much labor was traced to the job. Add it in there. Overhead's the tricky part because we can't just finish a job and say, okay, that's how much rent went to that job. That's how much property tax went to that job. That's how much depreciation on our tools went to that job, right? We can't figure that out. The definition of overhead is it's an indirect cost. So we got to figure out a way to systematically allocate overhead. You definitely need to know it. It's pretty easy. You will develop what's called a predetermined overhead rate. And that is simply taking, here's the total amount of overhead cost I expect to incur for the whole year. It's good to get a whole year's number because overhead, it cycles, right? Utilities are more expensive in the heat of the summer and that kind of thing. Property tax is due at one point in the year, right? And you want to spread that out over the whole year. So total overhead cost of the year. And then you got to figure out total whatever drives that cost. Now, in our problems, our activity that drives the cost will either be direct labor hours, direct labor dollars, or machine hours. It'll be one of those three. So we'll divide by the total of, let's say, okay, we're a pretty labor intensive operation. We figure the more labor hours on a job, the more overhead it should get. So that's what our overhead rate would be based on. So we take total overhead cost divided by total labor hours we expect for the year. All these are budgeted numbers. We need a way to timely, do this in a timely way. We can't wait till the end of the year and look back and start figuring out how much jobs cost because we probably already sold them, most of them. So that's why we have to use a predetermined overhead rate. So keep in mind, predetermined overhead rate means we are basing it all on budgeted numbers. We don't know any actual numbers yet. Once we have that rate, we will apply overhead as those actual activities take place, as actual labor hours are worked. So it's pretty simple. We'll talk about over and under applied in a second. But let's jump down here. We'll come back in a second. We'll bounce back and forth on this, but looking at this simple example, they can give you 4 numbers and ask you so many different questions. They could have given us these 4 numbers and just asked us, what's their predetermined overhead rate? We know a predetermined overhead rate is going to be all based on budgeted numbers. It's going to be based on budgeted total overhead cost. And we're going to divide that by the total budgeted, whatever our activity is. Here they're using direct labor hours. So in here it's this and this, right? 270,000 is the overhead we expect for the year. We expect labor hours on every job for the whole year added together to be 90,000 direct labor hours. So we're just taking a simple approach to this. And we're just going to say every labor hour worked on a job means that that job is going to get overhead of $3. That is our predetermined overhead rate. So there's that. So that's something you definitely need to know. That's very basic. That's something you would have talked about in Principles 2, something you would have talked about in cost accounting. It may have been a while though, so we're looking at it again. So once we have that, we'll need to figure out how much overhead gets applied. They might ask you how much overhead is applied to this job. So you just say, all right, well, how many labor hours are on that job? Multiply it by $3. They may, as in this case, ask you how much overhead was applied for the whole year. And then we take the total labor hours actually incurred during the year. Multiply that by 3. That's what they're asking here. So overhead applied actual overhead. I'm not sorry, actual activity. Times predetermined overhead rate. So actual hours, 102,600 of them. We would have applied overhead every time one of those hours was worked on a job. That job would have gotten $3 added to it as cost. So for the whole year, we would have applied 102,600 times $3. We would have applied 307,800 total overhead applied to jobs. For the year. That might have been a question that they could have asked. They might have asked, by how much did you screw this up? You're going to screw it up by some amount because you're estimating numbers and applying it all based on estimates. We're not fortune tellers. We can't see the future. We're going to miss it by some amount. We're going to either put too much overhead into the jobs or not enough into the jobs compared to what actually ends up being spent on overhead. So actual overhead, which we don't know till the year ends, they tell us was 308,000. We got mighty close, didn't we? Yeah, that would never happen. No. Applied overhead. Do you do this in your job?
Yeah, it makes a lot more sense now that I see it.
Oh, nice.
So we have percentages. We don't do it by hours.
Right. Yeah.
But this makes sense because I know more about that though.
Yeah, they never really go into it in a percentages like you say. They usually do it.
And I think that's what everywhere really uses. So.
Mm-hmm. Yeah. I guess it's conceptually easy to grasp this more so.
Okay.
Kind of like the high-low method nobody uses, but it's cool to see what the thought process is behind it.
We have some way of incorporating that calculates all that. We just have to,
Yeah.
use it. So
That's neat. Yeah, applied overhead that we just computed was 307,800. We missed it by $200. So if we had known the future, we would have set it up to have applied actually 308,000 for the year. We did it all based on estimates, so we missed it by 200. We applied not quite enough, just a little less than actual, right? So we were under applied. Barely. So the fact that we under applied overhead means that we slightly undercosted our jobs for the year. Very, very slightly. So ultimately, inventory is understated a little bit. Cost of goods sold was understated a little bit. So we would usually just, as a guy I used to work for would say, we would just blow that out through cost of goods sold. That was what he would say to make like correcting entries or adjusting entries, and blow it out through cost of goods sold. We would adjust cost of goods sold to bring everything where it should be. So cost of goods sold is understated. We would debit it for $200 and be fine. So let me bounce back up here to the notes. This is something they could have asked you. So now that we've seen one, let's kind of look back again. So again, our product cost in the job costing is adding up direct material, direct labor, and applied overhead. So we just went through how to apply overhead, right? We form a budgeted or predetermined overhead rate. We'll use it throughout the year. It'll be based on estimates. And then actual activity will tip us off that we need to apply that overhead rate to the job for every labor hour, for every machine hour if we're more automated, or maybe every direct labor dollar incurred if we've got different levels of skill for our employees. More expensive employees working on a job might tip us off that we need more overhead there. Whatever the problem tells you, All right. And then in our notes, over and under applied overhead. So since overhead's being applied using budgets, like we said, we're going to screw it up a little bit. It would be either over or under applied. Journal entries, here they are in case you need them. These are very simple journal entries. I don't know the extent to what you'll need to know journal entries, but I would say definitely understand as material, direct material, direct labor, and overhead are associated with jobs. We'll always debit work in process as we associate any of those things with jobs. So for direct materials, we would debit work in process inventory. Where does the material come from? Raw materials inventory. Labor, we would debit work in process inventory. Where does it come from? Depends on what the company does. For your purposes, I wouldn't worry about the credit end of this. But, you know, wages payable, let's just say. Overhead, as we apply overhead, debit work in process, and we'll credit overhead because as we incur overhead, we kind of debit it to overhead and kind of hang on to it in there for a little while until we use it. So I think that idea is important, just knowing that as these jobs have costs associated with them, our debit's always work in process inventory for any of the three components of it: materials, direct labor, overhead. So yeah, that I think is probably important. And then as goods are completed, and this is very logical, it becomes finished goods inventory, and it is no longer work in process inventory. You're just shifting it from one inventory type to the other. Debit the one it's going into, credit the one it's going out of. So, you know.
When you're washing everything out to cost of goods sold, like you said, cost of goods sold is just like a plug figure, right? Like you're backing into that.
Yeah.
Okay.
Yeah. Well, like with the overapplied overhead.
Yeah.
So yeah, we'll bounce down there here in 1 second, and I'll show you what I'm talking about.
Sorry.
No, that's fine. That's a good question because I probably wasn't going to fool with it.
Yeah, the journal entries and like the notes from the book didn't really like clarify that, but when you said it, obviously I realized
Okay.
what it meant. Okay.
So as good, I can't seem to move.
I know most accounting books don't come out and say plug either.
Yeah, but yeah.
You know, that's what we call it.
So as goods are sold, we would debit cost of goods sold, which is an expense. Debit that, credit finished goods. So these are really logical journal entries. So it's more of a understand than just memorize, because we should know kind of this type of thing at this point. These are really basic journal entries. But to answer your question back down here, what would this have done to our journal entry? So we got 200 underapplied, which means cost of goods sold is understated. We need to bump it up, right? So we would bump it up with a debit, it's an expense, and credit overhead to zero that account out. Yeah, that's the journal entry. If it had been overapplied, that would be flip-flopped. Debit overhead, credit, cost of goods sold. Yeah. because the thing about, that's the easiest way to think about this. Underapplied, cost of goods sold is understated. I need to increase it. If you want to approach it from the other direction, that's T account, this overhead account. So as we incur overhead, as we spend money on rent, we would debit overhead and credit rent payable. As we spend money on insurance, we would debit overhead and credit insurance payable. Whatever our overhead is, we're going to incur overhead with a debit and credit payables or whatever. So in this case, we would have ended up with 308 actually incurred. All right. As we apply overhead, debit work in process, credit overhead. Total applied was 307,800, so we would have debited work in process for 307,800. We would have credited overhead for 307,800. So this is incurred. This is applied. So we would have ended up with a $200 debit in here. That zeroes that out. It's harder to think of it from that direction to me. I just like saying over applied, overstated, credit cost of goods sold.
I think that's what my brain was trying to do.
Yeah.
It just wasn't working for me.
Under applied, understated, debit cost of goods sold. But just know that the other side of that does act to zero this out. So it all comes together nicely. All right, so that's taking a really big topic and just kind of hitting the high points that I think are the most important. Any questions on any of this? Chapters like this are frustrating in the CPA exam because it's like, there's so much more to this. How in depth do we go? So yeah, kind of have to hit the high points and hit it well enough to know that how you can reason through the rest of it. And look at the examples they give you in the assessment questions and see if those are doable. So let's see what we got here. Okay, for some reason, this may be the third time they've done this to us. This is still a make or buy question that has nothing to do with this section. I think they've thrown this at us 3 times now. So this is not for us yet. Make or buy question. We will cover later. Sticking that on us. Don't worry about that one yet. We're not ready for it. This problem, they're really liking this problem. They really want us to answer it. We're not ready for it. All right. So here's another question. A job order cost system uses a predetermined overhead rate based on expected volume and expected fixed costs, they say, whatever. Predetermined overhead rate, just like we said. At the end of the year, under applied overhead might be explained by which of the following situations. All right, so easy to reason through. What would cause you to under apply overhead? So think about what we've got going here. The easiest thing to think about is if our actual volume is less than we expected, that means we're applying that overhead rate not as many times as we thought. That clicks in my head immediately, right? So too little activity, rates applied less than expected. So I like this and not this. So we're halfway there. We've ruled out 2 of them. All right. Now you have to think about how the costs would have affected this. So and think about the way it's worded. If costs ended up being more than we expected, that means our rate was based on a smaller number than it should have been, right? You really have to think about the kind of the intricacies of this and make sure you've got the wording correct and the thought, the way it should be. So if fixed costs ended up being more than expected, another way of saying that is if you used a too small of a rate, that would have impacted this. So that's your answer right there.
This is where I would just plug numbers and start.
It's also a good strategy. So they're saying in here, make up numbers and see how it plays out. That's always a good strategy for conceptual questions like this.
Sometimes it takes long.
That's true. I shouldn't say it's always a good strategy, but
No.
it's a strategy I use a lot.
I tried it in bar.
And
I shouldn't.
I'll make up I'll use 6 and 2 is my go-to made up numbers, easy numbers to just to divide by. 4 and 2 gets confusing because 4 divided by 2 and you get another 2 in there and it's like, oh no, what 2? Yeah. So I use 6 and 3 or 6 and 2. Just kind of make up a scenario and see what happens. Number 3. This is too super simple. In a job cost system, manufacturing overhead this is a stupid question. You can skip it. It is an indirect cost. Yes. It is a necessary element in production. Yes. There's a stupid question in there, didn't they? That would not be a CPA question. That's a little too easy. 4 is kind of out of left field on us a little bit. These are all pretty easy. 6. All right, 6 I like. Check out 6. This makes you need to kind of understand the whole big picture to get 6 done. So let's look at it. So they're wanting us to determine how much materials are charged to job number 5. I've told y'all several times I always like to read the last sentence first to see where they're taking me on this as I read through. So ultimately, I need to figure out materials on job 5. So in my head, I'm thinking, all right, they're going to have to give me some way to figure out labor and overhead and the total cost of job 5 to do this. So hopefully that's what they'll give us. All right, so reading from the top, this company uses job costing. Here's what appears in their account, their work in process account. So this is a different format of saying, here's our beginning work in process. There's our materials, there's our labor, there's our overhead, and this is our cost of goods manufactured, right? Went to finished goods. Why else would it go to finished goods? Manufactured is done. BEC applies overhead to production at a predetermined rate of 80% of the labor cost. In other words, 80 cents for every direct labor dollar. Job number 5 is the only job still in process. All right. In other words, whatever your beginning or whatever your ending inventory balance is, that is job number 5 because it's the only job in process. So if we know ending work in process, we know the cost of job 5. All right. They like to do that. All right. So job 5 was charged with 2,000 of labor. How much is your materials? All right, so here we go. So job number 5. Direct material, direct labor, overhead. So what do we know? We know we don't know this because that's what they're asking us. They tell us labor, 2,000. They tell us that overhead is 80 cents for every direct labor dollar, right? So 2,000 times 80 cents, 1,600. And they give us the way to figure out the total. It goes back to our good old working process plus material, labor, overhead minus ending working process, cost of goods manufactured. So we know beginning working process is 4, materials is 24, labor is 16, overhead is 12,800, ending working process is something. Cost of goods manufactured is 48,000. So all of that added together, 4,000 plus 24,000 plus 16,000 plus 12,800. So our total manufacturing costs are 56,800. 48 of that went on to finished goods, which means the other 8,800 of it is still in ending work in process. In other words, cost of job 5 because that's the only job there. So if we know labor and overhead, we can easily plug in the materials. Materials would have to be 5,200. I love problems like that. Complex, but they're doable. And they really kind of test whether you know your stuff or not. So that's a good one. I've seen so many similar problems to this in the past. Questions on any of these? All right, process costing. I love process costing. Y'all probably hate process costing. The good thing about process costing is it is what it is. They're not going to be able to throw really too many curveballs on you. They'll give you the same information. They'll ask you the same questions. So when you know it, you know it. It's not that bad. Not many notes to take as far as conceptual things, right? That's what I've got. We are using this type of costing when we're costing mass-produced things. Factory conveyor belts spitting out one after the other, you know, things that Mr. Rogers used to take us and see. Did y'all watch? Nobody watched this. I'm too old. Y'all missed out. Mr. Rogers would take you to all the factories and see how things were made. Crayon factories.
I know what you're talking about, but I never watched.
Oh man, you missed out. I love Mr. Rogers. But anything mass produced, that's what we're doing here. So let me tell you this, in a nutshell, process costing is simply taking all the cost of, like, let's just say a month. All the material, labor, and overhead you spend in a month divided by all the product that you produce during the month. That's really what process costing is. It's an easier way. Somebody's going to give me something on Mr. Rogers. There you go. I knew somebody was on there with me with Mr. Rogers. Mr. Rogers. You can still watch episodes online. I do it every now and then just when I need some encouragement. It's always encouraging. But yeah, process costing, to make it really simple, is, you know, September ends, and I look at everything I spent in September and divide it by everything I produced in September. And that's the cost of the units I produced. What makes it difficult is at the end of September, I've probably spent money on units that aren't done yet. So I've got incomplete units. How do I cost those? They're not fully complete yet, so they shouldn't get the same amount of cost as a fully complete unit does. So that's what makes this a little more complex. And even a little more complex is I may have half of the materials there and 10% of the labor in there. Or I may have thrown, you know, say maybe you're cooking some kind of food product or something. All 100% of the materials might be in there, but we haven't applied all the labor yet. So labor may be at a different stage of completion than would materials be. So a couple of things make this a little more complex. But honestly, your approach to this is to just find the rhythm of, all right, process, and you're just like a robot going through there, computing without even thinking. The more you do, the more you get to that point. I love process costing because I don't even have to think about it. I've done so many of them. You can narrow it down to 4 steps. I've got them right here, but we'll talk about that as we go. And unfortunately, we got 2 different methods that we have to do. So, you know, we just like to add complexities on us. But I have us examples that we can take beginning to end. And that will be good. So I've got us a weighted average and a first in, first out, just to give us how to do this. Step 1. All right, they'll give you the information every time, same information. So here we've got, here's how many units we began with. We started some more, we completed some, we still have some unfinished units. Step 1 is just to figure out what's going on with your units. All right, they've kind of got it set up for us the way I like to write it on paper, but I do the same thing every time. I kind of try to write it on the same place in the paper every time, just so it just kind of comes natural. So step 1, what is the physical flow of our product? Compute the physical unit flow. Where did I begin? Where did I end? What's going on? So if I am starting a process, writing, big, beginning work in process, unit started, units completed, ending work in process. I want to know those 4 things. They really give it to us in exactly the format I like to slap it down on paper. We started with 60 units already on the move, already some work done on it. During April, we threw another 510 units into the mix. We started working on those. Well, guess what? We got 570 units going right now. $450 of those are done. The other 120 are not done. 570 units to account for, 570 units accounted for. Every now and then they'll give you 3 of those numbers and make you figure out the 4th. So just keep in mind the units that you began with and the units you started. That's how many units are going on. The second 2 numbers are where they ended up. Some are done, some are not. Those each have to total the same thing. 570 to account for, 570 accounted for. So they could have left any of these numbers blank and we could have easily plugged it in. So we need to know that. We also need to know to what extent are these completed. You know, these are all done, right? These are 100% complete on materials. These are 100% complete on conversion. Conversion is labor and overhead added together. That's a definition, and I think we probably covered on week 1 stuff. Maybe not. No, I don't think we did. Well, here it is now. Conversion cost is labor and overhead added together. That makes sense, right? You got materials, labor and overhead is what you incur to convert it to a finished good. So labor and overhead, that is your conversion cost. So yeah, your 450 units that are done, they're 100% done as far as materials go. They're 100% done as far as conversion goes. They're done. Now these ending units that are still in work in process are not 100% complete. Now, here's what our text tells us. It tells us our beginning work in process units were 100% complete as far as materials go. We already added the materials last month. They had been 40% complete, so we had more work to do on them. All right, we're doing the weighted average method here. So we don't care about anything that happened with beginning work in process as far as what stage of completion they are. None of that matters to us. So with weighted average, all we need to know is how many units are completed, how many units are not, and what stage are they. So these ending work in process units, they're 100% on material. So all the material's been incurred. They're only 15% complete as far as conversion. So we've done 15% of the labor work that we need to do on that. Overhead kind of follows along with labor. That is step one. That's all you do, figure out where you're at. And that's really all. So that's easy. So a question could have come into play in a multiple choice setting that would have given you 3 of those 4 numbers and made you figure out the 4th. Gotta love those. It's simple adding and subtracting. So that's step 1. Step 2. And we already said we got 570 units we're working with. Some of those are done and some of them aren't. So our step 2 is we're going to convert these incomplete units that are partially done. We're going to restate those in terms of what if that 15% of labor that we applied there had been focused on just completely finishing a certain number of units. Equivalently, how many units have we finished with that 15% of labor? It's kind of like, say you've got, and this would stink, but say you had like 10 10-page papers to do. And you've done half of all 10 of them. In your mind, you would be saying, well, I've equivalently finished 5 of them, right? You would say, I have done 10 times 50%, which is 5. Same idea here. Convert this incomplete units into fully complete units. So here's how I do this. This is our step 2. So you've got equivalent units of materials. There's no need to really do the math I'm about to do because you can eyeball it and see every unit's complete already as far as materials go. Let's keep a nice parallel format going. I've got these completed units, 450 of them that are, whoa, what's going on here? $450 units that are 100% complete. That is equivalently 50 units, obviously, right? And then in ending work in process, I've got 120 units that happen to be already 100% complete on materials too. So my equivalent units of materials, all 570 of them. So whatever I spent on materials, I was able to accomplish work on all 570 units. They're done. So like I said, that's an unnecessary thing to write out like I did, but just to kind of illustrate and keep it parallel. Equivalent units of conversion is going to be a little different because all 120 of these units are not 100% converted. They're only 15% converted. So I do have 450 units that are fully converted. But I got 120 units that are only 15% converted. So 120 15% is 18. So I'm restating those 120 units that I've done 15% of the work on. I'm saying, what if I had taken all that effort and just zeroed it in on fully taking units from beginning to end and finishing them? That effort would have finished me 18 units. That's the idea there. Just like we said, doing half of 10 papers is equivalently 5 papers. 10 times 50% is 5. So the money we've spent on labor and overhead is enough to have fully completed 468 equivalent units. So yes, our conversion money has gone toward doing work on 570 total physical units, but equivalently only finishing 468 of them. That is step 2 every time. So step 1, I laid it out for myself here. And then step 2, I'm looking over here and saying 450 units times 100%, 120 units times 100% for materials. For labor, 450 times 100%, 120 times 15%. That's our step 2. We've restated our physical units in terms of, with the work I did, equivalently, here's what I finished. That makes sense? That could have been a multiple choice question. They could have given you all this and said, what's your equivalent units of materials? Or they could have said, what's your equivalent units of conversion? If that was your question, you're done. All right. Very good. Step 1, physical flow. Step 2, equivalent units. Step 3, we haven't done anything with money yet. Right now, we're just kind of restating units. So step 3, we start pulling the money in. We know how many units we've completed equivalently. We also know how much we spent to do all of that. So we're simply, step 3 is super easy. We're just taking money and dividing it by those units. So here's what I spent on materials in total. 1530 for those units that we had unfinished as we began, plus 17,850 that we spent on materials during the year. We have spent a total of $19,380 on materials. All of that allowed us to complete 570 equivalent units. So per unit, our materials cost is $34. That could have been a question. What's your material cost per unit? We'll do conversion the same way. Here's all the money we've spent on converting any units that we've got going, whether we spent it last month on the units or this month, add them all up. That's where the whole idea of a weighted average is coming in. We did some work last month on these units. We're doing some work this month. Combine it all and divide, regardless of when. So conversion cost, every bit of money we spent on conversion in the problem, 156 plus 11,544. $11,700. All that work, we equivalently finished 468 units. So divide 25 bucks. That could have been a question. So any of these these things could have been questions along the way. Just go with that number. So they could have asked us equivalent units of materials. They could have asked us equivalent units of conversion. They could have asked us cost per equivalent unit of materials, cost per equivalent unit of conversion. They could have asked us total cost of any unit. All right, that would make us have to say, all right, total cost per unit, direct material, direct labor, overhead. So direct materials 34. Labor and overhead is 25. $59 per unit. They could have asked us that. And that's our step 3. Questions on that? Okay. They could have asked us, and this brings us into our final step. I mean, we're done with the cost accounting part of it. I mean, this is what we do. We figure out how much stuff costs. We've done that. But sometimes they like to ask us something like, now that you know all this, once you compute all this, what's the total cost of the units you finished? Well, that's really easy. Total cost of completed units. Well, we completed 450 of them. 59 apiece. $26,550. They could ask us that. And maybe the hardest question they can ask us, because it requires 2 steps. What is the total cost of these 120 units in ending work in process? Here's how you have to do that. All right, don't look over here where your step 1 stuff is. The trick to doing this is to look here. Look here. Ending work in process is made up of 120 units of equivalent units of materials, right? $34 apiece. $4,080. Conversion, not 120 units. So that's the number 1 mistake that I see, is somebody computing that, saying, okay, 120 units times $25. No. Our equivalent units of conversion that are in ending work in process is 18 units. Times 25. 50. $45.30. So they could have asked us that. So many things they could ask. All fair game, all equally likely to be asked. Even with the whole plugging in one of the missing numbers in part 1 is very likely a question 2. So you never know what you'll get. So that's our step 4, assigning costs to our ending inventories. 26,550 transferred to finished goods. 4530 remaining in ending inventory. Now, know if we're overwhelming things, but you can double check something. So, right here. Costs to count for. All right. There's only a certain amount of money in this problem. It's all right here. That's the whole total dollar amount that flowed through this problem. That money has to end up somewhere. So we've got 1530 materials from beginning working process. We got 17,850. Materials added in the period. We got 156 conversion from the beginning. And we've got 11,544 conversion during the period. That's all the money we got in this problem. Add all that up and see what we got. 1530 plus 17,850 plus 156 plus 11,544. $31,080. All of that has to end up somewhere. We can't lose any of it, and we can't add to it in our calculations. So that money either has to be part of those completed units or still in ending working process. Let's make sure we accounted for each of those dollars. $26,550 we said attaches to those completed units. $45,30 still remains in ending working process. $31,080. We didn't lose anything along the way. It's a nice little check to make sure you didn't screw something up along the way. Now, depending, if they give you a multiple choice setup, you may not be able to double check yourself there, but that's a good way to just kind of illustrate kind of what we've done. We took all the money that was spent and we applied it in the correct place. Questions on weighted average method of process costing? Let's look at, we'll not mess with FIFO yet. Stick with weighted average. Let's look at number 2 from our questions, because it's weighted average. All right. Cost per equivalent unit for materials is what they're asking. So that's our step 3 that we did. So we only have to go through step 3 to answer this one. Now, the thing about multiple choice questions, they'll give you only the information you need sometimes. Look, they don't give you anything about conversion cost or conversion state of completion or anything. They don't give you any of that because they don't ask you a question about that. All the question is about materials. So, what do we have? I always like to kind of keep a similar pattern going. Beginning working process, started, completed, beginning working process. So we began with 15,000 units. We added another 40. Notice we've got 55,000 units we're dealing with. So 42.5 of those are done. The other 12.5 of those are not. They didn't have to give us all 4 of those, but they did. They might have made us compute one of them. Easy to do because 55,000 of them here, 55,000 of them, they didn't go anywhere. Still there. But they gave us that. So notice this is really, really common, really common, more often than not. All materials are added at the beginning of process, which means if you've got a unit going, 100% done on materials. You add it right at the beginning. So if it started, it's done. So these completed units are 100% complete on materials. These incomplete units are also 100% on materials. The problem said so. They don't tell us anything about conversion, so we can't really do anything about that. But that's good. They don't ask us a question about it. Step 1's done. Step 2, what are our equivalent units of materials? Again, this is really not a necessary calculation because you can eyeball it and see it's going to be 55,000, right? Units we started means they're already done with materials. You don't really have to do this, but just to keep things parallel and consistent. Step 2, done. Half of it, half that we're able to work with. Step 3, cost per equivalent unit. So now we're pulling money in. Take every bit of money in the problem that was spent on materials. This and this. Add it up. So 5,500 attached to those beginning units. Another 18,000 added during the period. 23,500. We spent all of that and accomplished 55,000 units of work. So that gives us, it's always uncomfortable to get 0.427272727 because like, oh no, did I miskey something? Because you always like those nice round numbers to fall out, but it did not. But that does round to 0.43, which is D. Really good example of a process costing question. Questions on it? Quiet bunch tonight. Okay. Here is a weighted average question. So I'm checking out my question they're asking me at the end. What is the total cost of my ending work in process? So I see that, I'm like, dang it, I gotta go through the whole stinking thing to answer that. So stretched out and ready. Here we go. Step 1. This is where it comes in handy to keep that in the same format. They got it scattered out all over the place up here. All right, let's read through and see if we can find what units started with and where they ended up and how complete they are. Remember, they only need to give us these last two for us to keep going. We don't really need to know the beginning work in process or the unit started. All right. Work in process inventory on June 30th. That's our ending period. 40,000 of them. These are 100% on materials. Always just, this is just my little formatter writing it out. 60% converted. All right. The equivalent unit cost. Oh, okay. Throwing a little curveball at us here. The equivalent unit costs are $5 for materials, $7 for conversion. So, okay, they've given us only this amount for our step one. Then they jump down and give us what we would normally compute in our little step three. And then they're asking us a question about what we would compute in our little step four. So they're giving us bits and pieces, cuts down on our work as long as you can figure your way through it. They don't tell us how many units were computed. All they tell us is direct material cost or equivalent unit. $5. Conversion cost. $7. And then they say, how much is your work in process cost? All right, cost of ending work in process. All right. Well, we got 40,000 units that are 100% complete on materials. $5 per unit. $200,000. And what we know is that we're not going to multiply 40,000 equivalent units of conversion times $7. What would it have been? So if we're back, let's back ourselves up to step two. We don't know what our completed units are here. But we do know what our ending work in process conversion units would have been, right? 40,000 times 60%. 24,000 equivalent units there. That's what we'll multiply by down here. They just gave us little snippets of the puzzle here and made us figure it out from there. And 68. I guess that can really be the most challenging thing about this is when they only give you just enough. But get comfortable enough with them and you can breeze right through it. Questions on that one? Okay. It's FIFO question. All right, well, those are our computational weighted average questions. Glancing at number 6 here, this is kind of an unusual question, but easy enough, right? Inventories in process were at the following stages of completion. 100 units, 90% complete, 50 units were 80% complete, 200 units were 10% complete. How can all of that be restated as equivalent whole units? Really quickly and easily. 100 units, 90% complete. That is 90 equivalent units. $50 units that are 80% complete. That's an equivalent of 40 units. 200 units that are 10% complete. That's 20 units. So equivalent units are 150 units. Unusual question, easy question. I like it. Just the whole concept of equivalent units. 5. Remember what 5 is. In process 2, in some way along the way on a process, material G is added when a batch is 60% complete. All right, they're just putting a little complex scenario on us here. This doesn't really require any background knowledge. It's just logic. So we have a process, and a certain material is added when a batch reaches the 60% completion level as far as being converted. Any work in process units are 50% complete. So we're thinking, okay, material G is not added to that one yet, right? Because they're not 60% complete. So ending work in process units, which are 50% complete, would be included in the computation of equivalent units for material G. No, hadn't hit it yet. Conversion costs, yeah, conversion's computed along the way. One of our assumptions in process costing is conversion is incurred equally throughout. So as you start working, conversion's incurred as you go. So yes on conversion, no on material G. Easy question. That's FIFO. Okay. All right, the rest of these questions are FIFO. All right. Use the hoot. All right. Okay. FIFO. I kind of hesitate to do this right on top of weighted average because I don't want them to get kind of muddled up with each other, but I think it's a good time, good as any. Same concept with FIFO, doing the same thing. The only real difference is with weighted average, we just kind of cram some numbers together with the step 3 there. Just kind of added them up and did some math. With FIFO, you're being more precise. You are keeping the money that was spent last period associated with the product that was done last period, or the portion of the product that was done last period. So it's more intensive, it's more accurate. So yeah, there you go. So let's see, be sure to keep them straight. Don't let them run into each other and get you confused. Step 1, same. Figure out where you were, where you ended up. This time, though, what's going on with those beginning units is going to matter to us. So our beginning units, we had 60 of them. They were 100% complete on materials. We need to know that. 40% converted. 510 units started. 450 units completed. 120 units still in process. Those are 100% complete on materials. 15% converted. That's it for step 1. One little thing you'll want to do, because this is what's going to come into play here in a minute. These beginning work in process units, 100% completed on materials, last period, which means what do we have to do with them this period? Nothing left to do, 0% to go. 40% converted, meaning we got 60% to go. So that is what's going to be important to us regarding those units. So that's step 1. Step 2, equivalent units. This time you got 3 line items to compute on. All right. So you've got I think what order. I don't want to get inconsistent with how I always do this. Yeah, I do it just going down the line. All right. So with materials. To finish, beginning work in process. 60 units, 0% to go. You got nothing left to do on materials. No more work with materials on those beginning units. You're done with those. All right, our next line item is started and completed. In other words, what did we do 100% of the work on during this period? Started and completed. Finished them beginning to end. You can get this number in one of two ways, equally fine. You could say, I finished 450 units, 60 of which I did not start. Or you could say, I started 510 units, but didn't finish 120 of those. Give you the same number. So this minus this, or this minus this, however you want to do it. So 450 minus 60 is 390. 510 minus 120 is also 390. However you want to do it. So we did 100% of the work on those, started it and completed it. And then you got those units that you didn't complete. 120, but they are 100% on materials. So equivalent units of materials, 510. Now, if you think about it, it makes sense why it's 510. Materials are all added only in the beginning of the process. We started 510 units this period when we would have added all the materials immediately. We're trying to get all the work associated with the period where it happened. So those 510 units we started this period is where all the materials were added. So 510, 510. Makes sense. Okay. Conversion, same deal. To finish beginning work in process, we got 60 units, 40%, no, 60% to go. We already did 40% of it. We'll do the other 60% this time. So that's 36. Started and completed, no need to calculate that again. It's still going to be 390. And then 120 units times 15%. $444 equivalent units of conversion. All right. That is our step 2. All right. I think I have this worked out in front of me. I'm just going to do it as I go. Thought I might save myself from punching the numbers. All right. So, okay. So materials, conversion, we've got equivalent units of each. Again, that could have been a question. Either of those could have been a multiple choice question. So, all right, that's our step 2. Step 3. Now, remember, we are simply taking only the activity of this period, and that's it. That's where our math is coming into play. So 510 equivalent units of materials in this period and this period only, right? So if that's what we're computing, then we only want the dollars that we did in this period and this period only. So this time we're not cramming everything into one number. 7850 divided by 510, $35. Okay, 11,544 divided by 444. That is our step 3. And I think that's where we'll stop with this. The whole cost of ending work in process and cost of completed units, let's not worry with. I mean, cost of ending work in process, you would do it the same way. A more complex calculation is figuring out the cost of those completed units. I don't think it's worth our time to do those. I really don't. So I think just knocking out how to do step 1, 2, and 3 on this is fine. I don't think going farther is worth the effort. And we can only take so much of this, right? Okay, so that's FIFO. Let's look at our questions. So number 1, in computing, this is just a conceptual question here. In computing the current period, in computing the current period's manufacturing cost per equivalent unit, our step 3, right? Cost per equivalent unit. The FIFO method of process costing considers current period costs. Only. Right? We don't take current period costs and add it with beginning work in process cost. We don't subtract it, and we don't do any of this nonsense. So just current period cost only. All right, so they just want equivalent units from FIFO. So our step 2. So during the current year, the following activity took place. So step 1, figuring it all out. We got beginning work in process, 10,000. They just say 70% complete. So they're not even breaking it out into materials and conversion. So I'll let that throw you. All right, so 30% to go, right? Started 150,000. Completed 140,000. Ending 20,000. 25% complete. Okay. So yeah, don't let it throw you that they're not rusting it out into materials and conversion. We just got one calculation to make based on those percentages. So, all right, so to finish, beginning, work in process, 10,000 times 30% to go. Started and completed. You could say 140,000 minus 10,000. We finished on 140, 10,000 of which we didn't start in this period. Or you could say 150 minus 20. 150 that we started, 20 of which we didn't finish. Either one. 130. Myself much room. And then ending work in process, the same old deal that we've been doing. 20,000 times 25%. All right, so 138. And that's number 4. All right, well, that knocks out process costing. I don't think we had any others that we hadn't done yet. All right. Save that on that. Any questions on process costing or anything? This is all our last week stuff. It just takes a long time to cover. So I have to say button on there.